Hey everyone, Paul Vojchehoske. Hey, I wanted to show you a spreadsheet that I put together about 10 years ago, and this has been helping new agents in particular for several years now. One of the things I experienced early on when I was teaching new agents is many new agents, they had a hard time, at least when it came to bookkeeping, understanding the W-2 to now they're an independent contractor, 1099 bookkeeping system. A lot of them don't understand or don't remember that they have to pay their own taxes and whatnot. So the story behind this particular spreadsheet specifically was April 15th, and a new agent that I was training with came into my office, and he was literally white as a ghost. And he had just come from his accountant's office, and he had had a really good year that year, and he owed the IRS some $25,000 or $30,000, and he obviously didn't plan for it. He actually thought that just didn't think about the fact that, hey, when I came from my old job, they took out taxes, and obviously as an agent you have to pay your own taxes. So he literally threw up in my trash can. And so after that incident, I decided I was going to put this together. It's a very basic spreadsheet. Obviously, if you're using QuickBooks or one of the other accountant software, you're way beyond this, but this is a great tool to use, and hundreds of agents throughout the years have used this with success. So I'm going to go over this, show you how to use it, and then it's available to you. If you want it, just go ahead and email me, paul@randallschool.com, and I'll send it to you as an attachment. And you're more than welcome to change the formulas, reformat. It's not copyrighted. I don't care what you do. Just use it. Use it as a resource if you want to. So, all right. One of the things that we have to remember, and it's a question that I get all the time too from new agents, and that is, should I go out and get a new checking account just for my business transactions and stuff? And I always tell people no. And when you start getting going and you start getting a good number of transactions, a good number of commission checks and whatnot, then maybe you start looking at it. But for the average new agent, the answer is no. And the IRS requires that, their only requirement actually is that you separate your personal transactions from your business transactions. So in your case, as a new agent, you're going to use your personal credit card for business expenses. You're going to use your personal checking account for business expenses. You're going to deposit your commission checks into your personal checking account. All this spreadsheet does is separate those individual transactions for accounting purposes. And that's really all the requirement is, and that's what we're doing here. So I want to explain this spreadsheet. Up here is our total gross income box. Now what we're going to do is we get commission checks throughout the year. We're going to list them here in this column. And as we do that, and I'm going to show you how to do this, but as we do that, your column total is going to appear here, and then it's also going to auto-populate here. As we start getting our business expenses and we're paying for things, we're going to list them here, which will auto-populate the total here and also auto-populate the total here. So gross income minus total expenses will give us our net income, and it's the net income that we pay taxes on. Now what I've done here is there's a formula, and I'll show you the formula in a little bit. Based on our net income and based on a 30% withholding, here is your estimated taxes that you're going to owe to the federal government. I don't deal with state taxes because every state is different. Some states don't have taxes. Some states have taxes, but only above a certain dollar amount. So if you're really good at spreadsheets, you're going to be able to go in and calculate this to your specific state. But for most people, because the federal side is really the real tax burden, this is used pretty successfully. All right, we're also going to track our estimated tax payments that maybe you make quarterly tax payments to the IRS, and then we have what's called a Schedule C category total. So let's look at that real quick. Here's our total expenses. So as you're paying your Sprint bill, you're buying postage and stuff like that, we're going to put them in here. But I like to also, at the same time, put them in our Schedule C expense category. Now, most real estate agents, when they file their income tax at the end of the year, they're going to file what's called a Schedule C to their income tax. Schedule C is for real estate professionals, and we're going to have to break or itemize every one of our expenses into different categories. What I've listed here is the most common categories that an agent might run into or have to account for. There's also columns here for others, so all you have to do is is change it. Instead of put other, just put whatever you want in there. Maybe you have an expense, mud jacking or something, I don't know, whatever it is, you're going to be able to put it there. All right. So the main thing, as we're going to see here, is I want to make sure that my Schedule C totals, which is a total of all these categories here, matches our total expense category here. All right, so let's take a look at this. Let's say that on January 2nd, you go into the office and you have a $5,000 commission check, and that was for 123 Main Street. And we deposit it into our personal checking account, but we're separating that on this expense sheet here for tax purposes. Now notice what happened. As we put this entry in right here, it auto-populated the total sum here. It also auto-populated our total gross income. Now because we don't have any expenses yet, our net income is $5,000. So based on the formula that I put in here of 30%, the estimated federal tax that you would owe at the end of the year is $1,500. Now here is the spreadsheet formula, and you get to it by just clicking on there and it'll show up in your toolbar. Right here, this part right here, 30% is what I calculated. If you want to change it, you can. All you have to do is change that number. So for example, maybe you want to overestimate and you want to make it 40%. So we just put 0.4 instead of 0.3, hit enter or return, and it recalculates the estimated taxes that we owe on our net income. I have found over the years, though, doing this, that 30% typically is a really good number to use. So it's totally up to you if you want to change it. I've just showed you how to do it. All right, so let's say on the 5th of January 2018, we paid our cell phone bill to Sprint, $300. Now look what happened. Our total here auto-populated. It also auto-populated up here. Look at our new net income. Our new net income. Net income is simply our gross income minus our expenses. It's $4,700. So we have a new estimated federal tax burden, estimated, okay, $1,410. So we paid Sprint. We paid with credit card. And let's get our correct category here, which is phone internet of $300. Now watch what's going to happen here. Once I move the cursor, it's going to auto-populate the total here, and it's going to auto-populate the total here. So watch what happens. All right, $300 for the total. And as we pay our bill throughout the year, it's going to auto-populate. Notice here, $300. That is the complete total of all of our categories. All right, it's a running total. The main thing to remember is this $300 must match this number here. We call it double entry bookkeeping. So watch what happens. Let's say I made a mistake and only put in $30. Now watch what happens when I move the cursor. It readjusts here and it readjusts here. Notice that this $30 doesn't match our total expenses. It's a good idea to always make sure that these here match, because right now I'm looking at it going, oh yeah, there's a mistake here, and then I found it. I'm going to go back, readjust it, and now they match. Simple enough. One other thing I wanted to point out, our Schedule C expense categories. Let's take a look at them here. I always recommend to agents that for every one of these individual categories here, we need a place to put our actual hard copy receipts. And anytime you have a business expense, you need to make sure that you have a receipt, even if it's on auto pay. So maybe your cell phone company, they automatically deduct it from your credit card or they charge your credit card every month. They may or may not automatically send you a receipt, but you need to make sure that you have a receipt. We want to make sure that if we ever get audited, that we have absolute documentation of that expense. So what I recommend is you have just a regular manila folder that you can get at the office supply store for each one of these categories. And then when for example, we paid our January Sprint bill for $300. I've made the entry in here, but then I'm going to take the hard copy of that receipt, put it in the folder and put it in a drawer so I have documentation. All right, so let's move on here. Let's say that on January 15th, what did I do here? I'm not going to save it yet. So on January 15th, January 15th, 2018, I had to pay maybe your company charges agent fees. So ABC Realty, that's who you work for. You paid with check number 1235, and that is what we call an office fee that goes to your broker. It was $50. Now look what happened. There was an automatic adjustment here. There was an automatic adjustment here to your total expenses. We had an automatic, or we entered the $50, so there was that automatic adjustment, or the sum total here, and it also changed up here. Remember, this number should always match this number. So far so good. All right, so on 2/2/2018, February 2nd, we had another expense. Maybe you took a client out for lunch, and the total bill was $50. That's you and them. All right, so you went to Pete's Burgers. You paid with your personal credit card, no big deal. Dining and entertaining, put in $50 here. Now I'm putting in the gross. One of the things that's going to happen, and I do this, and I keep it this way because it's easier to remember. The IRS says you can only claim 50% of your bill. The idea is you're paying for your own lunch. Yes, you can pay for your client's lunch, and that's a legitimate business expense, but paying for your lunch is not. So the total bill is $50, but only 25 of it was your client. So you're allowed to take 50% of that 25. So what happens at the end of the year? In fact, what I'm going to do is I'm going to make this, I'm going to change the color to this to purple so it stands out. You're only allowed to take 50%. So if the total at the end of the year is $1,000, you're only going to be able to claim $500. But hey, talk to your tax accountant about it a little bit more. Maybe there is a way they can find a loophole, but so I'm just letting you know that. All right, so let's say that on March 1st, 2018, we got another commission check of $10,000 or $5,000. This was for 123 D Street. All right, it's a deposit. Remember, we deposited the $5,000 into our personal checking account, but it's a business income, so we're putting on the sheet here. Now let's look at the new total. We've made $10,000 in gross income. We still only have $400 of total expenses. Our new net income that we have to pay taxes on is $9,600. So according to the formula of 30%, we're going to have to pay Uncle Sam $2,880. All right, that's our tax burden. So let's say April 1st comes along, and we know right now year to date owe Uncle Sam $2,880, or roughly. And you have saved up $2,500 to make your estimated tax payment. So you paid with check number 1239. You made out a check to the IRS for $2,500. Now, two things are going to change here. You're going to notice a change here and a change here. Because we owe the IRS an estimate of $2,500 and we're paying, or $2,800, and we're paying $2,500 of it, it's going to automatically readjust our estimated tax burden. So watch what happens when I move the cursor. This is the total that we paid in estimated taxes, and now the new adjusted estimated federal tax burden is $380. All right, so it automatically adjusts. All right, so I don't put. I made this category separate, or at least this line item separately, because we could put it down here, but it kind of screws up the numbers, and you have to know how to create a formula to adjust for it. So I've just found it's easier to do it here. So, and really this sheet is all your tax accountant's going to need. All right, so that was April 1st. All right, May 15th, 2018, we had we did some marketing and advertising, and it was $1,500. All right, so 1, 2, 3 marketing. My favorite marketing company, 316 Strategy Group. They're a national company out of Omaha, and they do a great job. So anyways, I paid with credit card. It was $1,500. Now look what happens. It totals when I move the cursor. It totals here and it totals here. Watch what happens. Boom. Auto adjust. Notice our Schedule C total now is $1,900. That matches this $1,900. So our new estimate or net income year to date is $8,100. So we're looking good. $8,100. Our estimated federal tax is $70 credit almost. So that's good. All right. So then and I'm just showing you how this works here. Let's do another phone. So let's say on 5/16/2007 or 18, you had to pay Sprint another $300. You paid with credit card, right? So let's go to phone. $300. Now look what happens. It's going to auto adjust here. Boom, it auto adjusts here, $2,200. That matches that. That changes our net income. Right now, we're looking good as far as what we owe Uncle Sam. We don't owe Uncle Sam estimated right now. All right, but that changes because you're a good agent, and on June 15th, you get a $10,000 commission check. Bam! You sold 432 Main Street. You deposited in your account. That's great. Look at our adjusted total now. We made $20,000 gross income. We have a total expense of $2,200. Our net income, our taxable income is $17,800. That means this is readjusted. Now we owe Uncle Sam, as of right now, $2,840. All right, and that also includes the estimate that we have already paid. Right, so July 1st comes along, you're going to make a quarterly payment. This time you saved up $3,000 to pay Uncle Sam. So watch what happens. When I move the cursor, it's going to readjust our estimated tax burden. All right, so now we got a credit of $160 estimated. All right, we paid with our check number. There we go. So you see how this works. All we're doing is calculating or keeping track of our business income, our business expenses, and then roughly calculating our federal income tax burden based on it. So I think you get the idea here. So I'm going to close this video up, but here's the deal. If you want a copy of this, make sure you email me, paul@randallschool.com. I will email this as an attachment, an Excel attachment. Again, have all the formulas already built in. Anything above this black line you really shouldn't have to mess with other than putting in your estimated tax payments. Everything else is auto calculated. The only place really you need to make entries is below the black line. If for whatever reason you screw up the formula, whatever, no big deal, email me, paul@randallschool.com, and I'll send you another one. And just real quick, I don't know if I did this, but a lot of people requested that I put a charity worksheet in there. A lot of people tithe to their church, or they give so much of their income to charity. It's a great way to track it here. The other thing real quickly is I do not track mileage on here. Mileage is certainly a big tax credit that we get here. But anyways, that's all I have. Thank you so much for listening to the video. Again, email me if you want this. It is December 21st right now, so I would love to. I want to wish you and your family a very happy and safe holiday season and a very prosperous 2018. And thanks for joining me. I'm Paul Vojchehoske. Until next time, go sell something.